We live in a fantasy world now. Reality has been destroyed.
This is the time that you really need to pay attention.
The probabilities are overwhelmingly on gold's side. That is the best environment to see gold increase its value.
Welcome to Palisades Gold Radio. I'm your host, Tom Bodrovics. Joining me today is Lobo Tiggre, author and publisher of the Independent Speculator. Lobo, thanks for joining me today. How are you?
Thanks for having me back on the show.
Always great to have you, Lobo. And I'd like to, as many times as I do these interviews, I wanted to do something a little bit different. You're known as the due diligence guy. So what does that mean to you? And are there times where you have to ruffle some feathers to really show that you're doing your due diligence and put your opinion out there on whether something is good or bad, whatever that is?
Thank you to your audience. I did not pay him to ask me that question, which is right in my wheelhouse. So thank you, Tom. We actually go to the projects. We don't just read the PowerPoint. Of course, in the My Take service, which is sort of like Consumer Reports, it's really not a newsletter. It's a database which you can slice and dice for different things you might be looking for. I can't visit 1,000. Maybe over the years, 20 odd years, I might have gotten close to that. But even I can't go, visit 1,000 projects all the time or whatever. But I do have a team. And whenever possible, we do go proof the stories on the ground. But even if not, I think, and this is something you can do this at home, is to cultivate that skeptical attitude. You should understand that no matter how likable the CEO or the IR person of a company is, they are salespeople. That ultimately is their essential role. They need that share price. Even if they're really doing great geological work, they still need to promote the story to be able to raise funds to advance the project on reasonable terms. You can't do it in penny stock hell. So these are salespeople. And your role on the other side of the table is, but essentially antagonistic, or at least in tension with their objectives. Your role as an investor is to be skeptical, to filter, to push back. And that's what we do. I have a dedicated team of diehard skeptics that somebody just accused me the other day of being a sophisticated investor. And I said, no, not really. I mean, I don't have millions of dollars of trading algorithms like these Wall Street fat cats have. I said, I'm just a scarred investor. And I think that, combined with actually putting the effort into the due diligence, going beyond the PowerPoint on the company website, makes a huge difference. Mm-hmm. If you listen, sorry, I won't go on about this forever, but you've hit on my pet peeve, Tom. If you listen to somebody like Howard Marks or Warren Buffett, love him or hate him or whatever, these famous investors, Peter Lynch or something like that, you'll hear a common. They have their different approaches, but one thing they'll often say, or will come out of these conversations, is if you can just eliminate the worst of the meltdowns, the worst mistakes, the terrible companies, if the average goes into the market, the average investor does the average things, all you have to do to exceed the average is avoid those worst outcomes. Mm-hmm. Like mathematically, that makes sense. Logically, that makes sense. Intuitively, that makes a lot of sense. You see people in the marketplace, they get all excited about something or another. They get religious about some stock, and darned if they don't go down with the ship when it's obvious to everybody else, right, who's not intoxicated on the story, that the ship's going down. So putting that effort into the due diligence, marrying that with the skepticism of a scarred investor, I think can help you, even if you don't hit all the 10 baggers. Avoiding the total meltdowns, the stocks that go to zero, mm-hmm. can make you have higher than average gains.
It seems to me as you're explaining that, Lobo, that a lot of this is about trying to maybe eliminate emotion, both positive and negative, right? It's trying not to become too enthusiastic when you're hearing a great story and trying to poke holes in it, and also trying to temper enthusiasm when you're already invested in something that is, gaining market share, gaining share price appreciation. And as you said, kind of becoming religious about that. I think a lot of this is about, again, trying to temper that emotion. So does that come from that scarring, as you said, of being, an abused investor in some ways, or is that just something that you've kind of come to learn over the years through other lessons?
Yeah, well, I like that you put it that way, come to learn, because the other answer would be is it's innate. I'm just a cold fish or a cold wolf, as the case may be, right? And therefore I have an advantage because I'm less emotional than other people. That's not a very happy answer for the audience, because if that's so, that kind of means that some people are screwed. Like there's nothing they can do. They're just too emotional to be investors. Mm-hmm. I think on the extremes, there may be some of them. There are some people that are just, they're very excitable. And that doesn't tend to lend itself to good investment outcomes. Mm-hmm. And probably, if that's you, it's a good time to look in the mirror, recognize that, and maybe just go with ETFs or, sector, make sector plays as opposed to individual stock picking. But I don't think that's most people. I do think that most people can. I mean, we all feel something. Even I feel something sometimes. But it's one thing to feel it, and it's another thing to act on that feeling versus your reason. This could be a long topic. I actually just posted a talk I gave on emotional intelligence for investors. There's a link on the free side of my website. Mm-hmm. But the key point is, we have feelings. We can't not feel. And of course, it's natural to be excited when something is doing well. But we shouldn't confuse that with knowledge. Our feelings tell us about our values. Something good has happened, something bad has happened, tells us what we want. Our reason tells us how to get there. Like, I don't want to feel how thick a girder on a bridge should be. I want an engineer to do the math on that, right? And use reason in that environment. Mm-hmm. So this can be trained. That's the good news here. And you mentioned the scarring, and the scars will certainly do it. But if not, if you can learn vicarious from other people's scars, so much the better. And being able to have that discipline to say, okay, yeah, I'm excited, but what do the facts say about this investment decision? Right? That is something that I think anybody can practice. Pain is a great teacher, so sure, those scars make it easier, but there's no reason to wait, for all that time. But let me say one other thing, though. There are times when you just get I'm sure you've experienced this, Tom, like a bad feeling about this story. Like on paper, I mean, it looks good. Like I can't figure out what's wrong here, but there's something about this. It's just my spidey sense or my wolf whiskers are twitching here. Something just isn't right in Denmark, right? The smell isn't right. And I can't give you a number on this, but it seems like maybe not 9 times out of 10, but maybe 7 or 8 times out of 10, you later find, that the discovery was fake. It was a one-hit wonder, or the company turns out to be out of cash. They can't follow up. The merger falls through or something. Mm-hmm. So, and that is, you can say, okay, it's intuition. It's the cumulative, inarticulate, but specific knowledge of experience. You can scientific it however you want, but it feels like something. And I think that feeling is actually worth paying attention to. There is useful intel in there. So long story short, I'm not saying be unemotional. I'm saying, listen to your emotions, think about what they're telling you, but decide with your rational mind.
Again, you're talking about kind of following your gut in some senses. And I think a lot of times we have gotten so far away from that, especially as investors that are constantly, rationalizing things, looking at numbers, trying to analyze things unemotionally. I think there is something to be said about following your gut. I was listening to a story the other day, or reading a story the other day. It was about either Bre-X or Nortel, I want to say. And the incentive structure that they had set up for their employees basically made it so that the employees were incentivized to basically create this fraud from within, because the incentive structure was set up such that if they could find any of these profits, if they could, cut the corners at the margins, they were rewarded for that. So I think that's a perfect example to kind of illustrate, okay, maybe there's something a little weird here, and maybe following your gut a little bit in certain cases.
That reminds me of one of my friend Doug Casey's stories. One of his top 3 investments was actually Bre-X. And that was over 100-bagger for him. And I've seen the copy. I've seen the original, Doug Casey's old International Speculator when he went in and when he came out. And when he came out, it wasn't math. It wasn't his spreadsheet. It wasn't over allocation or portfolio rationalization. It was none of that. It was, I mean, you can read it. It's just like it's verbally, it's his gut feeling. He's just looking at it kind of like,
this is a little too good.
And the way he not verbalized because it was written, the way he articulated was, you know what, this thing's got a bigger market cap than Freeport McMoran, and it's an exploration play. I think it's time to start taking some profits here. So it's very much a gut kind of analysis as opposed to, here's the spreadsheet. And that brings to mind two other things. One is, and exactly with what you're saying, I think there is a propensity to over mathematize what we're doing. I mean, humans are inherently chaotic systems. And we're dealing with, it's not just the geology, but we're dealing with the humans and the companies too. And as you say, incentives can make that human factor like really blow something up. So it's just not true that you can put everything in a spreadsheet. And there's another free article on the website called The Adventures of Spreadsheet Guy. You can use the little search glass at the top there to look for that. But I kid you not, I ran into a guy in the DRC who was running around the jungle with his laptop open, typing in assumptions to his model for an exploration target that had like 6 drill holes in it. And he's already thinking pit wall, angles and rock competence. And it's like, a guess on top of a guess on top of an assumption. Like, are you kidding? And he's going to get some kind of numerical answer for what this stock might be worth. And people will see. And the danger is, like, if I come back and I say, hey, this looks pretty good, then people can say, oh, well, maybe I'll take a shot at that or not. If I come back and say, my share price target is, it's 350. It's at 128 right now. My target is 350 within 17 months, not 16, not 18, but 17 months. Wow. And here's the math, here's the charts, that looks really serious. They must have done so much research. That must be real due diligence, right? It's just phony math full of assumptions. So this is a pet peeve of mine for years, this over mathematization. I call it the thud factor. You throw a thudding, phone book size study at something. Oh, that must be serious. But at the end of the day, nobody knows what's going to happen until they build a mine, shovel dirt through the chemistry set and see what comes out. You know that. You've seen this before. And sorry, one more thing. We haven't even talked about the rocks yet, but in the world we're heading into, Tom, and dear audience, with AI out there, AI tools out there, whatever can be systematized about exploration success, projecting study results, NPVs, IRRs, whatever can be systematized, studied, predicted, the machines are going to get it better and faster than you or I ever can. So if you're going to have any competitive edge against other investors, particularly those fat cats in Wall Street that can spend a lot more money in their machines than you and I ever will, unless Jamie Dimon is listening. Sorry, Jamie. You're not going to compete against that herd. Your competitive advantage will be your humanity, which could be that gut instinct. Now, I'm not defending, what our friend Rick Rule likes to disparage as got a hunch, bet a bunch. I'm just saying that there is something to experience and intuition that until, the AIs can model us humans completely, that's got to be our competitive edge. And to the degree that you rely on a spreadsheet, and I kid you not, true story, this happens to me frequently, Tom, where I'm at a conference, somebody comes up with a literal spreadsheet, a printout from their Excel sheet, and they're like, oh, I ran a model and I came up with these 12 companies. What do you think? These are 12 silver explorers I'm considering, or 12 gold producers, whatever it is. And I look at the sheet, and half of them are great, like I own them. And the other half are absolute dog's breakfast, wouldn't touch them with a 100-foot pole. And the thing is, the spreadsheet, it recognizes the value proposition, but not why. The quantitative, like this management team is a bunch of serial liars who run lifestyle companies for decades, taking shareholder money to money heaven. The spreadsheet can't see that. They just see, oh, this thing's cheap by the ounce in the ground, or whatever the metrics are. So Adventures of Spreadsheet Guy, highly recommended. Don't over mathematize this. I'm not saying ignore the math, but your humanity has value, dear audience.
As you as you explain that example of a certain price target at a certain time, that inherently appeals to people.
Yeah,
People love
certainly. I
that
know
stuff.
what's going to happen.
Exactly. And that applies to everything from the mining shares, all of the stuff that we discuss and look at on a daily basis, but also, everything else, whether that's I want to move to another country and get a second, citizenship or residency, whatever. Like, people love that certainty. And a lot of times and this is what I tried to do on the show, the other part of what you're saying is that basically nobody has the perfect answer for how to analyze mining stocks, how to analyze or how to trade these things. And having the luxury of having so many of these conversations, being able to triangulate and collect the best pieces from everyone that makes the most sense and use that entire educational base that we have on the show, I think is one of the ways we can kind of build more of that intuition, build more of these tips and tricks, because any one single person doesn't have the ability to analyze and properly trade or perfectly trade every single one of these opportunities.
That's an interesting idea, Tom. I mean, you've got years and years of archives of all these, many, many conversations. That would be perhaps an inhuman task to go through, but therefore maybe it doesn't take a human. Maybe here this is a good thing.
Exactly.
You get one of these AIs that summarizes conversations. What collective wisdom could be accumulated from all the Palisades Radio interviews done over the years? That's the sort of thing that I could see where an AI could turn out a useful response.
I'm going to have to try that right after this.
It might take a while to crunch. You'd have to have a tool that has access to everything online, because not all of them do.
Mm-hmm. So, Lobo, let's move into some of the actual things that are happening instead of talking about this in such an abstract sense. Right now, there's so many different pieces of noise flying through the air. Trying to figure out what's important has never been, I think, more challenging. But let's take the current developments about copper as an example right now. We saw Trump make this announcement that there's going to be a 50% tariff on copper. How does this make sense to impose such a large tariff on such a core metal when the US is trying to rebuild their manufacturing base here?
Well, okay. I mean, I actually think the real answer here is far deeper than just copper. But let's look at copper. And the things to keep in mind are that a U.S. tariff, and sorry, Trump, MAGA Maxis, the U.S. importers pay that tariff. Now, can the source provide a discount to offset that? Maybe, maybe not. That remains to be seen. But the fact is, it's the U.S. party that pays that tax. And so this 50% tax on copper is being paid by American copper users. And this does have an immediate impact. The most immediate one was that since they did signal this before, and the amount of 50% was a surprise because that is really high. And the short fuse on it, this was announced earlier in July, and the fuse was August 1st. No 90 days or even 50 days. I don't remember what it was, but I think it was less than a month. Mm-hmm. So this produced a scramble that took copper prices to all-time highs. But that's U.S. copper prices. I think the London benchmark has started creeping upwards. But at first, actually, the alligator jaws just opened. U.S. copper went up. And actually, London copper a week or two ago was cheaper than it was a year ago. Because copper is a globally fungible commodity. By weight, it's more valuable than oil. And oil has been able to evade sanctions, and Iran, Russia, whatever. It's been able to flow around the world where it was wanted. And I think copper is even easier to do that with because of the value concentration there. $5 pushing $6 a pound. That's a lot of money in what would be the equivalent of a barrel of oil's weight, right? I don't know how much those barrels weigh, but it's a lot. So the way I try to get people to think about this is, suppose you're a Peruvian copper miner that has contracted to sell all your concentrate to a smelter in China. So you're producing in Peru, your costs are in Peruvian, whatever they are, and you're selling to China, and none of this goes through the United States. What difference does it make to you what tariffs and what taxes U.S. copper consumers pay? So, I just think it's a mistake to get too excited about this. Oh, copper tariff, woo, everything's going to the moon. Well, yes and no. Something's mine. I do think this is material. It's obviously an advantage for U.S. copper projects. But there aren't that many of those. And even if you have something like Operation Warp Speed on the permitting, which Trump is trying to do, to give credit where due, right? Even if you get the permit, you still take years to build. And how many of these projects are shovel ready? There's really only one, and it's already got the permit. And guess what? We've heard crickets since then, because it just takes a long time to ramp up and get going. That one project, and we all know that, let's just say there has been a resolution to a long-standing problem. It'll be years before we see a single pound of copper out of that. Mm-hmm. And that one mine isn't going to come anywhere near enough to satisfy the United States' needs. It's, we import like 50% of our copper. So what am I saying? One, don't get too excited. This copper is a globally fungible commodity. And as the new reality, whatever it settles down to being, percolates its way through the system, things will normalize. Mm-hmm. Okay, this hasn't created copper scarcity. If it incents new production, it might actually incent new resources to come online that wouldn't have otherwise. And remember, all that copper that doesn't come to the US, now it's going to go somewhere else. And that could actually push prices down in other places. Again, globally fungible. So that's one thing. The other thing, though, is like, why is Trump doing this? And I don't know if you want to go there, Tom, but it's not, in my view, just about incenting domestic copper supply.
Well, maybe before we get to that, let's talk about how you would go about incentivizing domestic copper supply, because this is the other obvious side of the question is, if you're going to create this barrier and this tax on all copper coming into the country, what are you really doing on the other side of this to fast track permitting and especially, somehow aid construction of these mines, considering that you slap the tax on today, the deadline, or let's say you announce the tariff today, the deadline is 2 weeks from now where it actually takes effect, but yet it takes, as you said, 5 to 8 years minimum to be for the first pound of copper to actually be produced from some of these projects.
Well, if you did have one shovel ready, it might just be a couple years, but there aren't many of those. Most of the big copper projects in the U.S. are, I'm not even sure how many are at the feasibility stage yet, Tom. So yeah. Again, to be fair, Trump is working on the other side of this. He did announce these expedited permitting regimes particularly for critical minerals, of which copper is one. Interestingly enough, he specifically included gold on that list. Mm-hmm. Sorry, silver bulls. He didn't include silver, at least on that list. He did include uranium. So it is interesting that Trump's not just going by the classical definition. By the way, previously the U.S. government had not considered uranium a critical mineral, despite that it can't be substituted for 20% of the U.S.'s power because it's considered a fuel. Like, it's a definitional thing. Oh, fuels aren't minerals somehow, right? So they couldn't include it on the list. Trump doesn't think that way. And he said, these are the things that are important. We're going to expedite permitting. And I forget, he gave the Department of Interior like 2 weeks to come up with a list of priorities, and then gave him like another 2 weeks to permit them or something, or the EPA. I don't remember my details here, and I don't want to misspeak because the EPA would be the permitting authority, not the Department of Interior. But you remember probably these executive orders that I'm talking about. That hasn't necessarily resulted in a flood of permitting, but he's trying. Mm-hmm. And I think that is what's needed. And frankly, if the goal was just to produce more copper supply, I don't think you'd need the tariffs. You just address the permitting, exactly. Make it rational for a business to deploy capital for expected returns in this business, and you'll get a lot more things because, copper is valuable. And I think to one degree that we haven't had more of a response to Trump trying to open the floodgates and cut the red tape is because people know, okay, well, that's Trump now. What happens in 4 years? If it's going to take you 3 or 4 years to produce a feasibility study, right about the time that you might be trying to finance have shovels hit dirt on your new project, you could have the pendulum swing and an anti-Trump come in and shut everything down by executive order. So the risk here is pretty high. If they don't codify this, not by executive order, but in law in some way that seems Democrat resistant, if you will, not to take sides, but just that's the reality in the United States. There's good reason for American would-be producers to be cautious. I mean, these, copper projects big enough to matter. These aren't just, multi-million-dollar projects. These are multi-billion-dollar projects. These are projects with 30, 40-year mine lives, $5-10 billion in CapEx. The world-class mines are a major undertaking. And just because the latest administration has a mere 4 years of rope to play with says, yay, you have to be cautious about making that. Now, if you have a small high-grade project, something that can get permitted and built before the powers that be can change their minds, maybe that's different. But a project like that isn't going to change the balance of the market so much. Mm-hmm. So I do think that that the administration is at least trying to get onto the other side of this, but it's easier said than done. Or not even that. Like, there are limits to what actions they can take. Because the actions, they've actually taken by executive order actions that help with the permitting. And my sources on the ground in the U.S. West in particular, they can see it. They see the different behavior from the BLS and the Forestry Service types, and the marching orders have come down from Washington, and you can see the impact on the ground. So it's really happening. But like I say, if you're going to commit $10 billion to build a new 40, 50-year mine, you have to think longer term than just the next 3.5 years of this Trump administration.
Well, I think this is also difficult because there are so many changes already within, tariff announcements, tariff percentages, all of these different things. But on the other side of that, you mentioned the London copper price hasn't really reacted the same way it has within the US. And also we've seen inventories grow within London as well. So,
yes. There was this huge drain to the US, but now we've gotten to the point, it's not August 1st yet, but a ship can't get here fast enough.
Exactly.
So like all that trying to front run the tariffs, that's done. And suddenly, hey, inventories are starting to build overseas again.
So let's go back to the broader point that needs to be made here about what you think these tariffs are actually about and what he's trying to accomplish with them.
All right. So this may sound like I'm a Trump fanboy. I promise I don't have a MAGA hat. Whether that's good or bad for you, dear audience, you decide. I'm just trying to be objective, and I'm trying to make investment decisions in this world. So my observation is that this isn't really about tariffs. On one level, you could look at the copper thing as about tariffs, at least about revenue. Right? We've just given all these tax breaks, no tax on tips, no tax on overtime, all this stuff. We need to balance the budget somehow. And so, the reason why we tax gasoline on various government levels, like, the price you pay at the pump includes a bunch of taxes because you got to have gas. It's one thing you can tax it. Governments know they're going to get that revenue because you got to have it. So copper is essential like that. We call it Dr. Copper for a reason. So if it's about revenue, then it makes sense. It makes as much sense to tax copper as it does gasoline. But I think it's more than that. It's not just about revenue. I think Trump is I think his agenda is more properly understood, not just as America first, but as Fortress America first. I think Trump is looking out over the 21st century, and he's aware of the big grand game of geopolitics. He's aware of the Russian sphere of influence seeking expansion. He's aware of the Chinese ambitions over the course of the century, really. They're famously long-term thinkers, Asians. It's not just about, this news cycle. I think that if you look at Trump's behavior, it may seem chaotic. It's often theatrical. Trump just today shows up at the Fed and he pounces on Powell with a piece of paper in his pocket that shows a different number than Powell's expecting. Obviously that was prepared theatrics. But put all of that aside and look at, there is a pattern here. And trying to strengthen the manufacturing, the auto industry. Trump's agenda, as Doomberg puts it, he's really going after military adjacent areas. And the mining and the manufacturing, the auto industry, these all fit that model. And this doesn't mean necessarily that Trump's planning a war, but he's preparing to not be a victim of the wars ahead. And he wants America to be first. He wants Fortressamerica to be defendable. And that can't happen if the Chinese are making your high-tech military gadgets and you can't even build a tank in your own, turf. Mm-hmm. Though who knows how long tanks will be useful with the drones. So it's interesting that they are switching to the drones and the tech stack too. The point is, whether you agree with that or not, maybe if you're Chinese, you don't want America first. I don't know. But I do think that this is the bigger thing here. And if you start looking at what Trump is prioritizing and where he digs in his heels and where he doesn't, like this whole taco thing, if it's all part of the deal, where does he backtrack on? Where does he dig his heels on? It seems to me that this is Trump's real agenda. Fortressamerica, he wants America on top in the 21st century. Or maybe if you're European, you don't want America on top of the 21st century. I'm not passing judgment on that. I'm saying this is my perception of the actual agenda going on here. And I think Trump is willing to exaggerate the truth, maybe depart from the truth, engage in theatrics, whatever it takes to pursue that agenda. And let's put aside judgment on that agenda for a moment. If I'm right, this has investment implications. That's where I want the audience to go with this. And I know I'm going to get rotten tomatoes from either side on that, but the importance here is, if your goal isn't ideological, but if your goal is to make money, dear audience, the takeaways is this agenda is hugely commodities intensive. The raw materials for this agenda, whether you're building drones or tanks and the AI stack to go with it, it's going to take a ton of energy. It's going to take a ton of infrastructure materials, Dr. Copper included. So however the tariffs work out, like if he backs off from 50% to something else, or if he sticks with it, however that works out, we're still going to need that copper, right? So let's say it goes from 50% to 25%, Wall Street might say, oh, yeah, it's better. And copper prices might tank. That would be an opportunity. If you understand the bigger picture here, it doesn't matter. The fact that 25% is lower than 50% doesn't matter given this global geopolitical agenda of building Fortressamerica and how much bloody copper that's going to take, and steel and aluminum and all kinds of other things. And it's interesting to me that Trump included gold in his executive order on the critical minerals and the whole talk about Fort Knox. And I know that hasn't gone anywhere and Elon's gone now and all that. But just to me, that it was on that list says something about the way of thinking here. In the same way, Trump, I think, wants to build Fortressamerica to withstand and stay on top in the 21st century. The gold is part of the financial fortress that goes with that. And I think that has investment implications as well. Oh, and by the way, even if you're anti-Trump, don't like Trump, you're on the other side of the table on everything Trump related, fine. Think about what that means for the BRICS countries. And think about what that means for central bank gold buying around the world, which has gone nuts ever since the so-called weaponization of the dollar, which was under Biden, by the way. Like, that is a huge change in the world of finance, and specifically for gold, but more broadly for the world of finance. This is significant economically and financially, and for, the centuries-old questions that we've had about what is money in a modern society. All of this is highly material.
Lobo, why do you think silver was not included on that list?
Can't really tell you, Tom. I mean, even if you say, I could guess that, okay, copper, aluminum, steel, obvious, gold, financial fortress, obvious, silver just didn't come into his mind. Maybe, I don't know. If I was a conspiracy theorist, I could say, it's part of the conspiracy to keep the price of silver suppressed. We'll never know that, my friends. Even if that was true, we'll never know. Unless we get a deathbed confession like McNamara by somebody 20 years from now, we're never going to know. But, to take the bull case for silver, it should have been. It's very important in a number of applications, including medical, including electronics, and of course the photovoltaics. Now, this could be part of the answer. Like if silver's part of the solar panel thing and Trump don't like no windmills and no solar panels, maybe that was it. He don't like no silver because it goes in the solar panels. But I don't think he's an idiot. I mean, he may say silly things on TV because he's a TV personality sometimes. But that would be an ignorant conclusion to reach. I mean, silver is actually important and used in many, many things besides solar panels. And the solar panels are still important, even if you don't want to pave the planet with solar panels. They're still important. So I don't know why it was excluded, Tom, but actually, the silver lining here, if you will, may be that there's sleeper potential in silver. And if silver continues on the tear that it's been on in recent weeks, as you and I speak, that actually gives it more upside than gold on a percentage gain basis. Now, the one thing I caution silver bulls, though, is be careful what you wish for. If you're all excited, woohoo, silver hit $39, it's headed for 40 and then 50 and beyond. Remember, the silver bulls always say that silver lags gold at first and then more than catches up at the end of the bull market. So if you're saying that we're in that part where silver more than catches up, you're saying that we're at the end of the bull market. That's very near-term bullish for silver, but afterwards, not so much. Like, I don't want to call the end of this bull market. And it's not just that I don't want to. I'm not being emotional about what I want. I'm saying I don't see it. I see the central bank buying. I see this commodity super cycle turbocharged by the Fortressamerica spending. And oh, by the way, Europe is rearming. It's not just Fortressamerica, right? This is a global trend. And you think the Russians and the Chinese are going to sit on their hands while the US and the Europeans remilitarize? Hell no, right? So I just don't think the cycle is over. Therefore, I'm cautious about thinking or even wishing that this is it. This is silver going to the moon now.
Well, but with so much uncertainty and really volatility with the first, let's just call it 6 months of Trump's term here, do you think that this adds to the recessionary fears for the US at this point?
Well, it certainly added to the fears, but it's interesting that those fears have now gone away. Like the fears have gone unrealized for so long, all of 6 months. Oh, those long and variable lags couldn't possibly be longer than 6 months. Like Wall Street has just gone, risk gone, almost no bears left on Wall Street. Even Mike Wilson where is he at? JP Morgan, I forget. Famous bear in recent years, finally threw the towel in, which could be a contrarian signal there, Tom. It could, with all the bears gone into hibernation, might be the time to. But here's the thing, and I fell for this too. We look at the reality of what was done in the COVID lockdowns and all the crazy things done since then, and now we've got Trump shock on top of that. And it's easy to make the bear case. Your David Rosenbergs of the world and so on will make that bear case, and it's rational. It makes sense. You look at the reality of the shakeup of the global economy that has really yet to hit the real economy. Even just the tariffs, because of tariff front running, that's just beginning to hit inflation stats. And yet Wall Street is completely sanguine about this. They've written off the risk. If we hadn't had a recession by now, it's not going to happen. Mm-hmm. I think that's wrong. I think that fear is reasonable. I think it's still on the table. But don't forget Lynn Alden's fiscal dominance thesis. And this is what I'm saying. I think I got wrong. I thought that we would have had recession by now. And the fact that we didn't, I think, is almost entirely attributable to the fact that the money helicopters never landed. Like my previous recessionary call post-COVID lockdowns was, this is bad. It's going to hurt the economy. Bad things are going to happen. But then the powers that be are going to respond with even more free money, right? So there'll be a brief recession and then even more inflation. That was my thesis. It wasn't, the Greater Depression, a la Doug Casey, or, down for the count. It was a scare and then a reflationary boom. What I didn't realize, or what I got wrong, frankly, audience, was that the money helicopters never landed. We ran $1 trillion plus, if not multi-trillion dollar deficits in the US the whole time. Even after, the Biden administration was telling us we had the greatest economy ever, somehow we still needed wartime levels of deficit spending. And sorry, Trump fans, but now the new administration is telling us we have the greatest economy ever, but somehow we need to kick the debt ceiling, trillions of dollars down the road into the future and spend all these, I feel like Carl Sagan, trillions and trillions of dollars. Now, these facts just don't square up. So never mind squaring the facts with the rhetoric. The takeaway here is that fiscal dominance really matters. And we've been shown in recent years, how very powerful that factor can be. And so while it might seem like you could say the economy deserves to go into recession from all the bad things that have been done to it, fiscal dominance, the money helicopter says that it's very dangerous to assume that it will. And right now, I don't have a base case for recession at all. I don't have a base case for the economy. And I just don't know, Tom. The honest answer is I don't know. Mm-hmm. There's enough scary stuff happening that I could absolutely see the U.S. and the global economies going into official recession. But there's so many money helicopters in the air that I could see the opposite. And I just think it would be a disservice to try to persuade the audience that, I know which way it's going to go.
Mm-hmm. Well, I think it's a very honest answer that I appreciate. And I think it's so important to basically be able to say that, because there's so many people
giving me the space to do it on.
Well, really, I've heard so many people be so worried about the recession, the coming recession. We've talked about it so many times, and yet, it seems that it is constantly kicked down the road. But what do you mean that the monetary helicopters never really landed? Like, how are they stimulating in this environment where we're seeing quantitative tightening and rates being held steady here?
Well, I mean, just on the raw numbers level, the U.S. budget deficit remained in the $1 trillion plus range the entire time of Biden's administration. Mm-hmm. And now we've just, kicked it up to a higher level. But don't worry, we will cut expenses somewhere down the road.
Doge.
So I mean, this isn't just a national debt clock thing. It's the current spending and the current account deficit that I think is, as I say, these are wartime levels. You can look at the charts. These are like literally World War II type levels of expenditures at the time where, whether it was Republican or Democrat, the powers that be are telling us we have the greatest economy ever. Mm-hmm. Like this, I'm sorry, but this part I just can't go with. I have to call BS on both houses, right? Now both sides had their agenda. They both had their reasons for wanting to gild a lily. And, maybe you agree with Trump's Fortressamerica agenda and you're okay with stretching the truth to achieve this greater good of keeping America on top in the 21st century. Fine. If you believe that, and if that's what you want, and I'm not saying I don't, please don't pigeonhole me. I'm trying to be objective here and be neutral to the audience. But let's say we agree with that agenda. That doesn't mean that we have to drink the Kool-Aid and say, oh, yes, the things that are obviously untrue are true just because they support our agenda. I don't think you do yourself any favors. And the objective here is to try to be objective and make good investment decisions. So love Trump or hate him, love Lobo or hate him, doesn't matter. If I'm right about the Fortressamerica agenda, it has clear implications for copper, uranium, steel, aluminum, many things. It also has implications for gold. And eventually, I think it has implications for silver, even if Trump doesn't love silver as much as he should.
So do you think then...
Oh, oil too.
Right. Yeah. Do you think then that, let's say, the fears for Europe are a reality for recession moving forward as well, considering, let's say, the previous industrial powerhouse, Germany, has seen, continuing rising jobless claims?
Yeah, and sentiment in Germany, I just saw the latest sentiment numbers. Like that's been perennially in the toilet for years now. They can't get out. But yeah, I do think that fiscal dominance matters there too. The removal of the so-called debt brake in Germany is huge. Mm-hmm. And if you've maxed out all your credit cards and some foolish bank is silly enough to give you another credit card or increase your debt limit so you can get even, hang yourself even more tightly with the rope. That's bad. That doesn't seem like it's going to end well. But if you've been the one guy on the block who's been, disciplined, keeping debt down to a certain level, you had a debt break on there where you just did not allow yourself to go over what seemed prudent, and now you release that break, even if you are imprudent, you're not the guy with the maxed out credit cards. You're the guy that actually has room on your credit cards. So the immediate effect of that is obviously expansionary. Even if somewhere down the road, this turns out to be a very bad idea for Germany and the EU, the piper will come for his due. You've bought yourself a lot of runway by releasing this debt break. So I'm not really worried about a hard recession in Europe anytime soon. We might see stagflation because, Trump shock is hurting the Europeans as much as it's hurting certain American interests. But then you've got the fiscal dominance. So you've got inflationary pressures and deflationary pressures at the same time. Stagflation results in the middle. And, it might seem to the audience, gee, Lobo, you're telling me you don't know what's going to happen. You're not doing me a lot of good. But I'm telling you, I don't know what's going to happen in these big macro questions. I do have a crystal ball over here. I can whip it out and see what I see if you want. But there are actual takeaways from this. I'm saying that it doesn't matter whether the stagflationary outcome is more on the side or the deflationary side. They're both inflationary, right? They're both good for commodities prices as a class and very good for the critical minerals as a subclass, and especially good for the ones that are in short supply, which is not all of them, right? So like I just tossed oil in there because it's obviously important. But unlike copper, where there's just so little in the pipeline that even the best regulations and incentives are not going to instantly create more supply, oil is quite different. Oil has been battling an oil glut for years now. So, be careful. You can't just take the big picture message. Oh, this is great for commodities and just buy everything commodities. Actually, if you're not a good stock picker, maybe betting on the CRB index as a super cycle bet with patience over years to come, maybe that'll work out. It won't give you a lot of alpha, won't give you much hockey stick potential. But if we're right about the big picture, maybe that'll work out. But what I'm saying is there's a lot of money to be made on those specific areas that are obviously going to benefit from the global agenda, not just the Trump agenda, but the global agenda, and that are facing structural supply constraints. And copper would be the poster child for that.
So let's take maybe uranium as a case example here. Maybe I was thinking about this morning, and if there is a particular investor that's coming to this just now, for example, and they've seen the price action of the miners up to this point, they've seen the price action of the underlying mineral itself, how would you think about or lay out the best strategy through which to gain exposure to this market from here going forward if they're coming at this with no exposure to this point?
If I didn't own any uranium stocks at all today, it almost pains me to say this because a lot of them are trading at 52-week highs, the better ones anyway, or even multi-year or all-time highs near that range, because we have seen people get the memo this year. Uranium carved out a bottom a couple months ago. And by the way, I'm not a market timer. I almost never nail a bottom, but I came pretty close on the uranium thing. And I put that out on my free weekly digest that I really think it's carving out a bottom. It's time to go long here. And boy, did that work out well this particular time. But the stock saw that. And, a large Canadian uranium producer that we all know and love, that shall remain nameless, it went from literally a 52-week low a couple months ago to all-time highs last month. Investors got the memo. That makes it complicated for what to do now. Now, many of these have backed off a bit, but not much. And on the flip side, if you've got a uranium stock that's done nothing, just couldn't pick itself up off the floor, That's not an opportunity. That's the market telling you there's something wrong with this company.
Mhm.
Like, we don't believe this story. So that's worth listening to. Now, maybe you know something everybody else doesn't know, and if you're willing to do the due diligence and try to uncover the undiscovered, overlooked gem, more power to you. But that takes due diligence to do. Your spreadsheet isn't going to do this for you. You can't just say, "Oh, this one's still cheap, I'll buy this." It's probably cheap for a reason. So, what would I do? It would depend on which one of those guys I was. If I was spreadsheet guy, I wouldn't pick stocks based on which ones are cheap, because they're probably, the dog's breakfast. I might just buy an ETF to get exposure to the metal itself, because whatever the stocks do next, if we're right about where uranium is going in the bull case, which we haven't really got into, but let's just stipulate to your audience, I'm extremely bullish on uranium. I've written a lot about it. It's all over the internet. Justin Huhn can probably tell you more about it than I can. So if you're on that camp, or if you got, you got the idea what to do now, if you don't have time or effort or money for due diligence, maybe just buy an ETF, get some exposure. And if that were me and I had no uranium in my portfolio right now, I'd do that today.
Mhm.
I'd buy something, low risk uranium equivalent today. Now, if I did have more time, or if I was really key on seeking alpha, I don't just want exposure to uranium, I want leverage to uranium, then I would have to do some due diligence in picking stocks. And in this, I'm sorry, this is a stock picker's market. You can't just throw darts at everything. I mean, maybe one of those ones trading at 52 weeks highs will go even higher, but that's investing on the greater fool theory, buy high and hope to heck to sell higher. That's not my preferred method of speculation. I want to buy low. And to do that, to find something that's still relatively low, but not, about to be nationalized or covered with legendary endangered mosquitoes or whatever, the problem is, right? That takes some due diligence. But I would go there and I'd be patient. These markets fluctuate. As we speak, the stocks have held up really well in the face of spot uranium actually declining over the last week or two. So it carved out the bottom, it went way back up to about or even above the long-term contract price, which is the real price of uranium. But since then, it's actually corrected a bit. So there is not just a non-trivial or non-zero. I think there's a significant chance that if uranium, corrects more, let's say it gets down below 60, like something with a 5 handle or 50 handle at the beginning of the uranium price, I think that would scare a lot of Johnny-come-latelys to the field, and that could create some terrific buying opportunities on the better companies, not just the ones that have fallen and can't get up. I think that's the best. It's like a time machine. When something like that happens, when there's some scare that shakes up the market, you don't have to figure out which the better companies are. Just look at the ones that did well when uranium rose at the beginning of this year, earlier this year. Those are the ones you want to own if the whole sector goes on sale for the wrong reason. Like the whole sector went on sale because of that DeepSeek thing out of China. And that was ridiculous. The fact that AIs could be done, more energy efficiently, that didn't do anything to the demand for uranium. Like the demand case for uranium, BRICS countries, China in particular, China is doubling its nuclear reactor fleet by 2040. That's like tomorrow in terms of nuclear builds. So like the demand side is so huge. This whole AI thing was maybe a tailwind, but even if it completely goes away and nobody ever builds another AI ever and again in the world, which won't happen, but even if that happened, you'd still need more uranium. So uranium got pounded by this news. The uranium stocks, most of them fell off a cliff. And that was an absolute gift from Mr. Market, because you knew which were the better companies and you could get them on sale. I'm not predicting another such cliff type event. I'm just saying, if markets fluctuate and if there's something else, whether it's a scare or just volatility in the market that puts uranium stocks on sale, absent a Chernobyl scale event, I would view such a buying opportunity as an absolute gift, and I would be buying with both hands.
Mm-hmm. I think that type of thinking extends into, a couple of the topics that we've already touched today, namely copper, right? Because you can't transmit that power. You can't make that power usable without copper. There's so many of these other materials, steel, nickel, so many of these other materials that are really included in that. So you and I have talked about themes that you're looking at for the year, or, for next year, whatever that is basically commodities in general. I hate to ask it as that broad of a question, but, realistically, when we combine the idea of more currency debasement, more whatever type of inflationary environment we're going to get, combined with the underinvestment in the commodity space, is that just what sets up this entire thesis for you at this point?
That would be the big macro view. And there are a lot of macro sources out there making the case. My problem with that, though, is the connection from that to what stock to buy. And this is why I brought up the different type of investor. If you're the type that doesn't have the time or inclination or ability or even interest to pursue actual due diligence and stock selection, maybe just buy an ETF and just stop there. But, if you go from the overall idea, you can be completely right about the historical trend that we're witnessing and buy the wrong stock and lose money. Right. So you just mentioned in that basket of things, yes, as a group, if you could bet on, again, I mentioned the CRB index, that would be, if you could bet on that and then just be generally right about commodities, that might work out. I don't think you'd see huge, big gains, but you might make money there if you're right about the thesis. But if you go to, dial down a little bit more, like you mentioned nickel in there. Nickel, like oil, is facing a huge supply glut, right? It turned out that Indonesia and the Philippines, it turns out they had lots of nickel, and a couple of years ago, the nickel explorers, there were a lot of promoters running around talking about, but you have to have, class 1 nickel, grade A nickel, only LME nickel. That's all that, that's what goes in the batteries. And if you don't have that, you've got nothing. Well, turns out that wasn't true. And nickel, the nickel market is facing, serious headwinds in terms of oversupply. So even if it is a critical mineral and it's used in making steel and many other things, not just the EV batteries, that alone is not going to soak up this huge amount of supply. So I think, from going from the broader or broadest, commodity thesis to which specific metals or minerals or commodities you're going to bet on, I think you have to be more selective there. And then you have to apply the same thing again within that metal. Like, let's say you pick uranium, which I think is a good one. It also, by the way, like copper, faces structural supply constraints. There are some mines being built now, but after that, there's like nothing in the pipeline for years. So it'll be a while before high prices can help cure high prices again. So anyway, so commodity, maybe a commodity ETF. Metal, you need to be more selective. Company, even more selective, and stock selection matters. And maybe I'm tooting my own horn here. Don't believe me if you don't want to, because I'm a due diligence guy. So of course I think stock selection matters. I'm talking my own book, if you will. But I really believe that. It's, if you bought nickel companies because they were cheap, the spreadsheet said nickel is cheap, and you bought nickel companies because your general commodities analysis, you would have been suffering over the last few years. It was especially if you chase that big nickel spike. We had a big nickel spike a couple of years ago. If you chase that, I don't know when you're going to come up from underwater. It's it's been years and you're still underwater. So yeah, selection matters. And of course, with the companies, like, nickel is an example of why you can't just buy any metal because of the broader thesis. We talked about uranium stocks. If you've got uranium stocks that have not responded to higher uranium, that's an example of how you can't just buy any uranium stock because you like uranium. Like, you were right about uranium, but you didn't make money because you picked the wrong stock. So maybe I'm talking my own book, but to me, it just seems self-evident.
Well, there's plenty to think about and chew on always. And I think the biggest takeaway here is to try to read and learn as widely as possible, because being able to establish the macro view and then zoom into which minerals that means, to be bullish upon, and then zooming in again on the particular companies, that all takes work. It takes due diligence. It takes,
yes, this is not a get rich quick scheme. Mm-hmm. Right? Anybody comes at you with some kind of get rich scheme, just do this, it'll be easy, you'll make lots of money. you should treat that with the suspicion it deserves. And, if you want to be a millionaire, you want to make millions of dollars, you think, if you want to do that without work, just buy a lottery ticket, okay? And understand that the odds are long. If you want serious money, then I think you ought to be serious about doing the work required to make it.
Well, Lobo, I think that's a good way to kind of wrap up today's discussion. Is there anything else that you'd like to leave our listeners to think about or to consider before we do?
Instead of promoting myself, let me just promote you, the audience, in line with what we were just saying, how Tom summed it up so well. 80-20 rule applies here. I think you can do better than 80% of the other investors out there with even just like 20% of the work, because so many people follow that got a hunch, bet a bunch method, or the meme stocks, or whatever the trend is. They follow the investment herd. All you have to do is try. Like, if you'll put any work into this, you're already ahead of the herd. And if you put a significant amount of work into this, I'm not saying, ruin your retirement or whatever. But if, Rick's rule is to, you should be willing to put an hour a week into the number of companies you own. So if you own 5 stocks, 5 hours a week, that's not too much. But you put that into self-education, awareness, following up, understanding the results, you will do better than the average bear out there. And that alone is enough, I think, to flip the odds in your favor.
Well, I think that's a great piece of advice, and something that I've mentioned as well lately. Nothing that I, in my experience, that I have ever been successful at or made a good amount of capital from happened overnight. It all happened from hard work, patience, and, let's say, a proper understanding of the time and the work involved to actually build some kind of wealth like that.
Another Rick Rollism. My instant success was 20 years in the making.
Yeah, exactly. For anybody that wants to read more of Lobo's work, that's all available at independentspeculator.com. And of course, excellent Twitter follow as well at Duediligence Guy. Lobo, thanks so much for your time today.
Thank you, Tom.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.